I mean, a fascinating, just an incredible point, because gold, once it can take out 2100 and really start to move, regardless of whether that happens in a day or two or a month or two, or it takes 3, 4, 5, 6 months, we are starting what I think is going to be the most significant move in this sector and industry in the last 50 years. It's an extremely exciting point in time that we're at. It's not only going to go to 4 or 5,000, it's going to go much, much higher than that. But, we can worry about that in, 3 or 4 years when gold's at 4,000 or 5,000. Eventually, in the next decade or so, it could be nuts, the levels that silver gets to, because when silver gets above 50, technically, it's going to blow the roof off.
Gold is on the cusp of its biggest breakdown in 50 years. That is the highly bullish sentiment of Jordan Roy Byrne, editor and publisher at the Daily Gold. According to Roy Byrne, a chartered market technician and member of the Market Technicians Association, gold's super bullish cup and handle pattern has been in the works for years, signifying a future breakout accompanied by a new cyclical and secular bull market. He now believes the time for that breakout is very near. In a recent interview with Investing News, Roy Byrne gives his updated price predictions for two of the world's primary precious metals, gold and silver. According to the editor and publisher, gold is about to have its much-awaited breakout, which could see prices jump to a record high of $4,000 by October 2025. Roy Byrne bases his prediction and timeline on several important factors, including the asset's fundamental and technical setup and the current state of the U.S. economy. During the interview, Roy Byrne explains that the United States economy is primed for a recession, and the Federal Reserve will have no choice but to cut rates while inflation is still above the 2% target. Historically, such environments have been very bullish for the precious metal. Over the next few weeks or months, Roy Byrne expects gold to break out above $2,100, a new all-time high for the precious. Then he expects it to move to $3,000, its measured upside target from the depth of the cup and handle pattern. By October 2025, Roy Byrne expects gold to be trading anywhere between $3,745 to $4,080, the pattern's log target. Roy Byrne also explains that if past bull markets are anything to go by, gold can easily gain 140% from the 2022 weekly low of $1,645. According to the Daily Gold editor, there are so many bullish signals converging for gold and, by extension, silver in 2023. He details his predictions, analysis, and estimates for the two precious metals in his interview, from which we will now bring you some insightful clips. Please watch the video to the end, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads featuring insightful discussions from some of the industry's most brilliant minds. Also, ensure you hit the like button and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm so our videos can reach more viewers. Thanks, and enjoy the video.
Well, there's a couple of reasons for that. First of all, gold is in a very bullish cup and handle pattern. And aside from it being a cup and handle pattern, you go back to the last peak in 2011, and yes, gold made a new high in 2020, but I mean, from there, it's corrected 2.5 years. So, because gold essentially hasn't had that breakout, and it's been 12 years since it's really surpassed that high. And so when you look at markets like gold in the stock market and other markets, when they have these breakouts, when they break past 10, 15, 12, 13-year resistance, they give way to new secular moves, and they're really, really bullish. And so cup and handles, you don't tend to see, they tend to be, like in a 1-year chart or 6-month chart. You tend to see them a lot on those time frames. They're very rare in, a 10, 15-year time frame like the one we're in now. A couple of comparable ones, Hong Kong, the Hang Seng, their market in the 70s and 80s wasn't as clean of a cup and handle as this one is, but I mean, that market broke out, I think, in the early 80s, and then it just went crazy for the next couple of years. You had the 87 crash, then it kept running after that. So that gave way to a real strong period of performance. Same thing with the stock market, 1937 to 1950, a similar cup and handle pattern. Stock market had a great breakout, and from 49 to 57 was probably the best 8-year period for stocks ever, because during that period of time, you had this very clean, stable uptrend. And I think there was only one downturn of 23, 25%. So these types of patterns I mean, you can, there's a simple measured upside target where you take the depth of the cup, then you add it to the top, and that gets us around 3,000. I mean, if some people are saying 2,800, 2,900, I mean, that's where they're getting those targets from. But if you also take the depth of the cup as a percentage, and then you apply that depending on which levels you pick, because the cup and handle is not perfectly clean. I mean, you could have anywhere from 3,750 to 4,100. When you say 4,000, like I've been saying, it gets a lot of attention. So that's why I'm saying 4,000. But now those other two cup and handles that I mentioned, they hit the first target, the measured upside, which would be 3,000 for gold, and then in 6 to 12 months, they went to the next target, the long target, which is like the percentage target. So based on that, you could say, gold, if it hits 3,000, it could hit 4,000 sooner than we think. And not to belabor the point, but there's another important reason why I think this is possible. If you look at gold historically, one thing I like to do on charts is just run a rate of change at the bottom. I'll plug in 2 years or 3 years or 2.5 years. They can look and see, okay, well, there's been a handful of times gold has doubled in 2.5 years, or, it's gone up 150% in 3 or 3.5 years. And if you look at, I think a 2.5 year period, gold, even in the 2000s bull market, so we're not talking about the 70s, which is really crazy. Even in the 2000s bull market, gold doubled, or I think it came very close to doing so within a 2.5 year period. So taking the low from last year and, doubling that low puts us, I think, pretty close to 3,300. But I mean, there's certain, I don't have the charts in front of me, but basically, making this projection that gold can hit, it can go from that low to hit 4,000, which would be about a 3 year period from that low in October 22 to October 25, because I've said 4,025. Based on historical performance from the 2000s, it's really not that crazy of a prediction. And so if people think that, and they're saying, the gold bugs are saying gold's going to 10,000, 8,000, 9,000, 20,000, whatever, we have the setup now where the next couple of years, like this is the time where it really, if that's going to happen, then it's probably going to start based on the move that's just starting right now.
Roy Byrne is one of many analysts that believe gold prices are about to take off. However, sentiments are still generally in check as investors seem to be reeling from the 2008 scare. No thanks to last month's banking sector crisis, the markets seem to be tensed in expectation of what Roy Byrne describes as the 2008 boogeyman. However, he is convinced that expectations of another 2008 are misplaced and unwarranted. During his interview with Investing News, Roy Byrne also discusses his outlook on the U.S. economy and price predictions for silver. According to the analyst, the U.S. Federal Reserve may be forced to return to the printers as early as later this year if a recession hits. Last month, after months of denying the possibility of a hard landing for the economy, the central bank finally agreed that we could be heading for a mild recession later in the year. Experts like Roy Byrne believe the recession could be much worse. Let's get back to the interview as Roy Byrne gives his outlook for the U.S. economy and price predictions for silver, which he says could begin to go nuts in a few months.
Well, I think right now in the short term, gold technically it's gotten really overbought. The stocks have gotten really overbought. But like I said earlier, whether gold corrects for a little while or it takes 3 or 4 or 5 months from now, I think it's setting up where it's going to blast through 2,100 and then really run. On the fundamental side, the Federal Reserve is coming to the end of hiking interest rates, and the market has been sniffing that out. I mean, in the last couple of days, there's some indications that, and maybe, some inflation statistics are not dropping as much as they would like, but the real setup for gold is, it might take a little time to get there, but the real setup is the economy is going to fall into recession at some point. I would probably say somewhere around, sometime in the third quarter. Maybe it's a little sooner, maybe it's a little after. But when that happens, I think the issue is you're not going to see inflation fall all the way down to 1 or 2%, or they want to get it to go. Maybe it comes down to 3 or 4%. But in the economy in a recession, in that scenario, people are, and I think it's already starting to change the sentiment, people are getting more concerned with growth now, even though inflation is still, whatever the stats are, it's still a problem and it hasn't come down. So the major point, which I'm dancing around, is we're going to get to a point, the Fed is, where they have no choice, but they're going to have to cut interest rates and ease policy when inflation is not all the way back down to 1 or 2%. So if they're easing policy when inflation is at 4% or 3.5%, and they have to, print money in that situation, that's just super bullish for gold. And that aligns technically with where the market is, because we're technically at a point where the market can really explode. So when the Fed is forced to do that, I think the market is already starting to sniff that out. But when it actually happens, that's why gold is really going to fly, because it's a situation where it's just, okay, we have to pick the lesser of two evils. We don't want to go into a depression. We're just going to have to cut rates and print money, and inflation's going to go up, and we're just going to have to deal with it. If I'm right about the 4,000 prediction, the path forward for silver is going to be nuts, basically. And also, because if gold's going to have this secular over the next 10, 15 years, it's not only going to go to 4,000 or 5,000, it's going to go much, much higher than that. But, we can worry about that at, 3 or 4 years when gold's at 4,000 or 5,000. So eventually in the next decade or so, it could be nuts, the levels that silver gets to, because when silver gets above 50, technically it's going to blow the roof off. Like it's going to probably go to 100 much sooner than people think. So you're going to see these real nutty moves in silver. So yeah, gold typically leads. And one thing I'm studying and looking at, I haven't finished it, but I'm looking at the times when gold makes a really big breakout. How does silver perform? And it looks to me like those are the absolute biggest moves in silver. So if and when we see gold above 2,100, you're going to see silver obviously really explode. Typically what happens is we tend to see gold make the breakout first. It's happened 3 or 4 times in the history. Gold makes a breakout first, and then silver after that makes its own breakout. And then that's when it really, really outperforms gold. And so we have a setup for that, because gold is really, really close to making that breakout above 2,100. While at the same time, silver has really significant resistance at 27, 28. Whether you're looking at a quarterly chart or monthly chart, it's really stiff resistance there. So I think we have to see gold make that breakout first. And then at some point, I don't know if it's going to be a month later or 4 months later, at some point later, you'll see silver break back above that 27, 28, 29 area. And that's the point when silver should really outperform and really, I think, get into the 30s and get to 40 pretty quickly, and probably back to 50 quickly.
From current prices to Roy Bryne's estimates will be about 100% increases in gold and silver. Though he has a 2-year timeline for these breakouts, there are discernible short-term goals, like an upside move to a new all-time high. If this happens within the next few months, coupled with a recession in the United States, we could really see gold and silver prices take off, as Roy Bryne predicts. What are your thoughts on his $4,000 gold and $50 silver price predictions? Please drop your comments and observations in the comments section below. Also, ensure you like this video. Subscribe and check out our other videos to stay sufficiently updated on current market trends. Thanks for watching.